Hey, welcome back to another episode of TaxFlow to CashFlow, where we break down high-level tax strategy and wealth-building insights for everyday entrepreneurs and families who are ready to move from just making money to actually keeping it and growing it. I'm your host, Denise Givan, the tax strategist, and today we're diving into a powerful episode. The three biggest mistakes families make when building wealth and adding multiple streams of income. So whether you're starting a side hustle, investing in real estate, or launching a business with your spouse or kids, this episode will help you avoid the financial traps that cost families thousands of dollars and keep them from building legacy wealth. Mistake number one, no financial infrastructure. So let's start with the first and the biggest mistake I see across families, trying to build wealth without a financial infrastructure. People get excited about launching income streams, a vending machine here or an Amazon store there, but they forget the basics: structure, systems, and strategy. Without the infrastructure, it's like trying to build a mansion on quicksand. Here's what solid infrastructure looks like. You've chosen the right business entity. You have separate bank accounts, business and personal. You're tracking expenses and income, every dollar. And you review your finances monthly, just not at tax time. Most families skip this. Everyone's moving fast, but no one's documenting, categorizing, or planning. And the result? No clarity, no control, and definitely no legacy. So here's the fix-it tip. Set up a simple system. Use QuickBooks or a shared family spreadsheet. Assign one person to manage it. Do a family check-in once a month and make this a ritual. So let's move to mistake number two, using personal credit for business growth. Now, the second major mistake I see, especially with new entrepreneurs, is relying on personal credit to grow the business. I get it. It's easy to just swipe your own credit card or business card. Your own credit card before you establish business credit. And then you'll just try to figure this out later. But this is where the danger lies. Using personal credit for business, it creates blurred lines for taxes, strained credit reports, and a false sense of affordability. And worst of all, if the business doesn't work out, the family pays the price. True wealth builders understand leverage. And business credit is leverage that protects your family's safety net. Now, here's the fix-it. Start your own EIN. Start with just getting one from the irs.gov site. Then open a business bank account and start applying for net 30 vendor accounts. Then build revolving business credit. I teach clients to do this every day, and the results are mind-blowing. You have lower taxes, better credit, and most of all, more options. So let's move on to mistake number three. Not treating the family like a business. Mistake number three, and this one hits hard, is not treating the family like a business. It really is. Wealthy families don't hustle separately. They operate like a corporation. Everyone has a role. Finances are discussed regularly. Ownership is structured intentionally, and assets are protected for generations. If your children are helping you with YouTube or social media or even an online business, that's marketing. That's labor. Your spouse managing appointments, that's admin support. Those roles can be paid, deducted, and protected, but not if you're treating the family like a random group chat instead of a real financial unit. Imagine if your family had a quarterly board meeting, a family trust, a shared investment plan, and a vision for 3 generations down the line. That's how you stop passing down struggle and start passing down wealth. Now here's the fix-it tip. Start with the family meeting this weekend. Talk money, assign roles, set goals, and consider building your legacy with a family LLC and trust. So now, let's bring all of this together. If you want to build wealth and multiple income streams, avoid these 3 mistakes. No financial infrastructure, relying on personal credit, and not treating your family like a business. I want you to ask yourselves right now, where am I leaving money on the table? Now pause and think about it. I want you to think about it. Where are you leaving the most money on the table? Where is my family unorganized when it comes to our finances? Where are we unorganized? And what steps can we take this month to get in position? Now, if you're really serious about doing the work, I invite you to grab my Tax to Cash, the Family Business Toolkit. It's free, it's a powerful, and it's very, very good for first steps toward smarter financial future. I just want to say today is an episode with the TaxFlow to CashFlow podcast. I always want to encourage you to take the next step. I am Denise Givan, the tax strategist. Until next time, flow smarter, plan stronger, and build what lasts.